People who advocate for a digital dollar in the United States point to numerous potential benefits of such a currency, claiming that it would increase financial inclusion, allowing for more effective distribution of government benefits, and provide a faster and cheaper way to send money overseas. However, the question of whether to have a digital dollar is far from settled, though it may have received uplift earlier when President Joe Biden issued an executive order directing federal agencies to study the issue. It's tough to say confidently whether this digital dollar in the U.S. helps the poor or not, but we can examine the whole scenario here. The United States is not the first country to adopt digital money. In fact, it lags behind the rest of the group. According to the Boston Consulting Group website CBDC Tracker, more than 60 nations and jurisdictions are presently studying or implementing their own digital tender. The Bahamas has already introduced the sand dollar, China is testing its digital yuan, and Sweden is exploring an e-krona, among other stuff. Each country's motivations are distinct. CBDCs have the potential to be revolutionary in poor nations, where people have limited access to dependable and inexpensive banking. For those moving money across borders, digital currencies might significantly speed up the procedure, which is notoriously difficult and is mediated by several institutions and volatile currency rates. When the U.S. government released stimulus checks as a sort of COVID-19 assistance, one example of how a digital dollar may have aided happened. Crypto aficionados stated that instead of writing checks, airdropping digital dollars would have been a simpler and faster way to transfer money to individuals. According to Brianna Marbury, executive director of the charity Interledger Foundation, a digital dollar might provide public benefits from the government considerably more efficiently than the existing system. The government was hurrying to get COVID relief funds issued, and in some cases, it didn't even have the correct addresses for those who had migrated. In other circumstances, persons were not registered with the Internal Revenue Service because their income was below the filing level. They were just up in arms because they couldn't figure out how to get these checks out to people in a timely and effective manner, and it was simply something that was really required at the time. Similar issues developed with the $2.2 trillion CARES Act, which was designed to help small and medium-sized enterprises and farmers. Some crypto enthusiasts stated that with a CBDC, everyone would have received a digital wallet with direct access to their cash, circumventing such barriers. In fact, lawmakers suggested that the Federal Reserve create a digital dollar in March 2020, but the Federal Reserve eventually chose direct bank deposits. Some argue that, while a digital currency might benefit low-income families and people, the features of a digital dollar must be filled out. CBDCs might have a significant influence on fiscal policy, particularly for people in need, said Jennifer Lassiter, executive director of the Digital Dollar Project. However, we won't know for certain how much of a good or negative influence CBDCs might have unless we explore specific use cases. According to a Brookings Institution report published by Tim Masad, former chairman of the Commodities Future Trading Commission, and Howell Jackson, a Harvard Law School professor, instead of involving the Fed, the Treasury Department could fairly quickly make digital accounts to deliver payment services that would be especially valuable to unbanked and underbanked individuals. According to Jim Kuna, a Federal Reserve Bank of Boston official, a digital currency might be one aspect of a solution to a problem that is larger than just dispersing government funds. The issue is getting more people involved in the financial system. You'd have to have a public policy purpose of doing that if you want to help address financial inclusion, Kuna said. A new technology by itself will not solve financial inclusion, just as it will not solve cross-border. One little use case, and you can see how CBDC may have some value, Kuna explained. However, it demonstrates the possibility. We simply haven't built on it yet. In the United States, over 35% of low-income persons open bank accounts just to get government aid. This statistic only covers those who are qualified to open a bank account, not those who want to, but don't have the means. Unbanked persons account for 7.1 million people in the United States, or 5.4% of the population, and the number rises to 14 million when underbanked people are included, who lack access to conventional financial services such as credit cards and loans. Many of them are immigrants who send remittances to their home countries, which is a costly service. They may either transmit that extra cash to their family and friends back home, so expanding local economies, or they can just put it in their own wallets, Marbury explained. If the Federal Reserve were to develop a central bank digital currency, or CBDC, she believes it would offer significantly cheaper remittance costs than private enterprises. Senator Sherrod Brown, Democrat of Ohio, the head of the Senate Banking, Housing, and Urban Affairs Committee, has made a similar point. Americans should not have to pay expensive fees just to use the money they previously earned. A central bank digital currency may function in tandem with these no-fee accounts to ensure that working families have access to the payment system and full participation in our economy, Brown said during a committee meeting last September. So, guys, that was it for this video. What did you think about our video? Let us know in the comment section below. And if you are new to our channel, be sure to subscribe and ring that notification bell to get notified about our latest videos. Thanks for watching.